What's going on, everyone? This is Jordan with Conquer Trading and Investing. If you're new here, welcome. And if you're not, welcome back. In this video today, I'm going to share my thoughts with Bitcoin, the cryptocurrency markets going into next week's FOMC meeting, expected rate hike. I'm also going to share with you some really nice, interesting TA lessons, specifically following oil, the DXY, and the NASDAQ. You will learn a lot. I hope you enjoy it. The reason for this upload is I will be for the next 2 weeks on vacation, on mission trip with my family. When I return, I plan on doing regular uploads to communicate with all of you on a daily basis, helping you navigate these markets. So until then, I hope you're all well. I hope you're doing great, and I hope you enjoyed this video. I don't consider this any type of beginning of bull market, even if it is the low. Even if we are able to have some type of rally over the next 6 months, 6 to 9 months, and if then things get a lot worse than they are right now, where the Fed begins cutting rates, layoffs are massive, and things are just doom and gloom, at that point, it's debatable whether or not, and this is assuming there's a rally, by next week, we could see before or after the FOMC, a breakdown. A breakdown would signal, a breakdown of the green trend line over here right now. This was tested, by the way, last Wednesday with the CPI, and it was a very strong 9.1 reading, and price was not able to hold the breakdown of that bear flag support. Instead, it rallied off it. It's where we took our long entries. It's where we are right now. If this rolls over, you just saw earlier that CTM 2.0 will be picking up short trades on Ethereum, on Bitcoin, ahead even of the breakdown, which is great because if price is breaking down, of course, this is where a lot of participants will pile on and gain momentum, but you were already positioned ahead of it, which also means that if it doesn't break down and roll coils back over again with some whipsaw volatility pre or after FOMC, we'll just continue to be on the right side. There's no question about it. But if price does break down below this line, then a test of 1750 and or another big leg down is entirely, that's what's happening. That's very real. That's very close. There's absolutely no victory lives for just being able to, first of all, crush it on both sides, right? Coming off the downside and then get the upside and then be positioned well, taking advantage of both. It's a lot nicer than that when price is going sideways and you're taking stop losses. It doesn't really matter whether or not this is the beginning of a larger relief rally, if this is the beginning of a bull market. We're going to be positioned, we're already positioned early, and that's going to continue to be along the course of the way. We might not get it perfect, but I don't think anyone could get it perfect. But it's a lot different. There's a big difference between getting it done and getting it done beautifully with style than just guessing about like what side of the market to be on, when, and how to do it. And it's good stuff. It feels good. A lot of people talking about whether or not this move has come too far. A lot of people wondering about whether or not, just looking at everything around them, it seems to be that price is acting different than what they thought was going to happen. Regardless of all of that, we have pivoted long Bitcoin, Ethereum last Thursday and Friday after that hot CPI. Every reason for the markets to sell off, but that's not what happened. We were able to catch the tail of the turn because price was in consolidation, and it's led us to a point today on 1 week later where we have two open positions, Bitcoin, Ethereum, and they're looking nice. Bitcoin, 11.5% into profit, while Ethereum is holding a 38.6% open position. That's enormous. That's coming off of some rather large gains throughout the year, especially on the short side. And that is sitting pretty. That is conquering the markets. That is knowing what side of the market to be on when. Here's the thing. If you're not yet in a trade right now, you are waiting. You're just waiting for the next opportunity. That's going to be when this current trade comes to a close. Where does that leave us on the right side of the market? That's really important. I just want to make sure that there's no sense of FOMO. So Bitcoin right now is currently trading, 30% off the low. It has had a double black diamond breakout, another black diamond breakout, and by the time that this trend would be considered to be corrected, totally repaired, Bitcoin needs to break above $30,000. If that were to happen next week off of the FOMC, next Wednesday on the 27th, you're looking at Bitcoin 72% off the low. Now, I'm not saying anything like that is going to happen or anything like that, or even do I remotely believe, but it could, or if it did, on the back of the FOMC, that Bitcoin was able to whipsaw into this big resistance, and it's big resistance. Let me zoom out and show you where we go back to the top of November, then over here in April. Once this line is broken on the upside, at that point, there's nothing in the way here. Now we have it full of horizontal resistance. What I wanted to show you and share with you is, at what point do you say that the bull market has started in Bitcoin? Is it 70%, or let's say this happens further out? My goal, if you remember, by September, if Bitcoin could be trading around $32,000, is that something that could be realistic? Is that possible? If that happens, is the bear market over? I mean, how do you define a bull market, and what does it matter? And the reason I wanted to continue with that line of thought is, whether you define it as a bull or bear market, once price breaks above this trend line, whether it was next week and it was like roughly 60-70% off the low, or it was further out into September, right? And price was, let's call it at that point, 40% off the low. Traditional market, S&P 500, it's 20% off of the low is the end of the bear market. Now, I'm not exactly sure if that means or equates to the beginning of a next bull market. And I don't think that's the case here in Bitcoin. I think that even if we are able to have any type of meaningful rally, and to be meaningful, we would need to have a break of that line of repair, and then to where it goes or anything like that. I don't consider that to be a bull market, or this the beginning of a bull market. I think that just looking ahead, the macro uncertainty is such that it's impossible to do. And when I look at that, the market is pricing in the Fed cutting rates next year. To me, that's just a simple sign of trouble ahead, and that things are going to be looking a lot worse than they are right now for the economy. Once the Fed starts cutting rates, that could still buy a little bit more time, but then those rate cuts come sooner and sooner until they're headed towards zero for the next impulse, and the next impulse is going to be absolutely massive. At that impulse, I'm more inclined to call the bottom. In past behavior of Bitcoin, and I don't believe in past behavior in Bitcoin, I believe that we are seeing new structures take place. The NASDAQ has been putting in repairs. It put in a very important one this week. I'm not talking about the trendline break. This trendline break occurring, let me put up the highlighter. This trendline break occurring right over here. Stop loss CTM 1.0 all the way down at the bottom. What's your risk? Whatever you're risking. Is it 1%? Is it 2%? This week it put in a big deal in the fact that the consolidation was taking place sideways. It broke out. It retested it, and it has resumed off. Now, right now, currently on this Friday, it is getting caught up in this little bit of resistance into it. There's bigger resistance above. This is bigger resistance over here, and I imagine this is where price, now that it's broken above this channel, is headed. It doesn't mean that it happens in one day. Where it is next week, will it be able to test this resistance pre or post FOMC? I think that's the question, and then manage your risk. Where is that wrong? Drop back into the channel. At that point, I would say that this has gone more no man's land, back to neutral, is very undecided. And then maybe the market will be looking forward to see what happens out of the FOMC. Be very careful. It could be a very, very hot event, this Wednesday's FOMC. There could be lots of whipsaw and spiking around. I don't imagine it's going to be a non-event. I think it's going to be a pretty big one. We'll watch what happens very closely, as usual, not only into the event, but how price reacts afterwards. Then, more importantly, I should say most importantly, first how price reacts, then go ahead and get the narrative. You already have your position in and your positions, and when you enter and exit, you're not trading off the event. The best way to learn from it is watch what price does and then go back and read the recap. And I get giving that heads up since I'm not going to be there next Wednesday. I want to make sure that everyone has that awareness ahead of time. The S&P 500, look at that. I'm looking at the resistance it just got caught up into. It definitely closed above it, and it now is trading off over here. If this was on a Friday, well, this is a Friday. If you're trading the S&P 500, right, and closing below here, you're getting neutral. You're just getting neutral, and that makes a lot of sense, right? Was there any reason to be holding any type positions after this nice week over the weekend? I'm sure you're seeing a lot of trades being tied up. The dollar we need to talk about, and that's only because the dollar has come now in and tested this line of support. If this breaks, we have a breakdown in play. I mean, we were already able to, do you remember? This was done very, very well here. A lot of people were at that point insistent that there's nothing in the way between 120 and the DXY and why I believe the dollar could go higher. That's not what's happening right now. We have classic CTM 1.0 technique in place. The second black diamond is in play. That came down once it came down towards the double black diamond. That at that point, stop loss moved to break even. This trade opened, and then on the breakdown of this black diamond, at that point, your stop loss could be moved now over here to the high. I think that's 107.50, and then holding the position right now with a stop loss, locking in profit, a lot of room for price to move either which way. And this green line over here, that a break of that to the upside, that would suggest that this move right now, which is a counter trend move, the dollar is still in a massive, massive, massive uptrend. Something similar to this. This was counter trend, but it's a very tasty move to get a hold of. And then if it does lead into anything further, you are at the very top and did catch the very top. Now's the part that matters, and it's trade management. It's not up to you to kind of decide what happens. We talked about, CTM 1.0, take a little bit off, 10, 15%, but you don't want to cut your winners short. You want to give the opportunity for this trade to move. People will say, well, you never go poor taking profits, but you'll never get rich either. You'll stay close to break even as possible if you're really good. The way to make money is to give the opportunity for those trades to push, and the ones that push, let them go. Learn, push your winners, make the money off them. Same concept over here. If this breaks down, then a breakdown has begun. At that point, I think I would move this line, just so you know ahead of time. I'd move this line like this and then touch that break over there. And that would be the first double black diamond. That would even be a double black diamond. That would just be a line of repair straight up. Double black diamond would come in later. If this broke down, price breaks down above this conservative line of repair, black diamond could look something like that at that point, right? This time coming on the upside. But this is in a strong uptrend, and we've just been able to. And by the way, it was really beautifully done on Twitter, talking about what happened with the hot CPI print out of New Zealand and somewhere else. I forget wherever it was that day, and wondering if that was going to be a precursor to what happens in the U.S. And then the hot CPI came in, and then watching the market's reaction off of it. It's kind of counterintuitive when you see a very hot CPI, and then at the same time, you see a further sell-off of yields, right? Dollar not continuing to rise. Expectation should be that the Federal Reserve gets to continue raising rates. That should be the expectations. Now, I know that we saw ECB get off of liftoff with a 50 basis point rate hike. The Fed's getting ready to hike at least 50 basis points, probably 75 basis points. And what does that mean? Why are you seeing the dollar soft, and why are you seeing yields come off? That remains the question. By the way, this is a major big breakdown that is in play today coming into the close. Very, very, very interesting. We said that, or I said that. I'm just like, at this point, price could be sporadic and choppy in here until it breaks down over here. Stay out. A breakdown over here, I could continue to see a further bid in bonds. I think from afar, I saw that for the first time in a long minute. We've seen foreigners buying bonds. It was the question as we took the top tick over here, right? We had a couple of double black diamonds, and then they were faded to the upside. They didn't work out, right? This is a big, big uptrend. And then off of the entry over here, a lot of people kind of trying to, well, who is going to be the buyers? Well, now we have some data. It turns out actually that people are buying USA bonds. And here we are. There's one other thing that I want to say. Yeah, I thought you were talking about, I learned that technique from Jordan. I thought you were talking about smashing the like button. So what else? We got a good rundown of across the board of everything that's happening. We're in front of it. That feels the best. And we just got to make sure this is all counter trend. We want to make sure that if the dollar reverses out of over here, even though holding on to the beginning of a nice short position, that we're able to get it. I don't want to come down like this just now. I think it's a little aggressive. That's why I have the green line over there. I'll be waiting and watching. A lot of oil traders are really, really struggling, not understanding why the paper price is coming down and coming down so hard. And they're looking at supply and supply issues. They're looking at demand, and they're wondering why the price isn't significantly higher. And a lot of people believe that in the coming future, price is going to be significantly higher. Now, I don't know. We don't have to do that. We were able just to, off the charts, we did identify this breakdown, this trendline break at the top when it occurred. And that's when we were talking about the macro can change quickly. Rather than having to rely on any type of news and thought and analysis and research, we're able just to use our skills and stay on the right side. And this is the right now where the yellow line is. At this point earlier in the week, I said if we broke that trend line, I wouldn't call that yet a reversal. I would be waiting for this resistance to break over here, but now we've put some space between the two. And at this point, a breakout would have to be considered, even at this particular time, a resumption towards the trend in place. It's not unrealistic that at any point throughout the rest of the year, that oil could be testing and or making new yearly highs. However, at the same time, it could also be trading much lower, closer to $80, $75 a barrel by the end of the year. And you know what? I think that at that point, why you just don't go and buy the dip for something like that. Again, depending on what happens next year, depending on when actually the rate cuts begin, depending on how quickly they get to zero and how quickly they start running the printers, that is going to be the time, I believe, to really look for a longer lasting trend on oil. However, pay attention to what everyone is saying regarding the physical supply side stuff, and that they don't believe that it is anywhere priced appropriately right now. It should be priced higher. If we get technical breakouts now to the upside, it's time to pivot to the other side and just make sure we stay as best we can on the right side. Now, depending on what your time frame is, right? This is 8 hours swing trading. Someone who's watching this from afar, who's watching this on the weekly, right? At that point, they're playing this a lot different, right? What do I mean by that? We looked at this chart over here with all since the invasion, no weekly closes below. Then finally last week, we have a close below. Since the close below, price came up, retested it, and looks like now it is potentially looking to resume lower. Someone might want to have, I don't think that it's too far of a time frame for me, but someone might be waiting for a weekly close back above to say that this downtrend is over. And it's another way to look at it. It's another way to execute. That's it for today, CTM.